Tonight, we're in the tunnel towards the light at the end of the tunnel, which is, of course, vaccination and economic growth. But the reality is setting in. Now let's look at economic pain. And economists are warning of a double-dip recession as hiring slows to its lowest pace since July. Nearly 750,000 Americans filed for unemployment benefits last week. And the Labour Department says 712,000 people made claims. Slightly lower than the previous week, but you've got to put it into the context of 250,000 Americans receiving benefits under the Pandemic Unemployment Assistance Program, the self-employed and contractors. And yet, at the same time, the light at the end of the tunnel, that Wall Street bounce, the Dow's over 30,000 because the market believes the vaccine's benefits will come, and it's pricing in future earnings. Chris Hyams is the CEO of job-seeking website Indeed. He's in Austin, in Texas. Forgive me, sir, you join me now. The difficulty here is the market is telling us that they know things will get better next year. But the jobless numbers are telling us that there is a surge underway. Restrictions in the economy are coming in. So which way do you look at it?
Richard, thanks for having me. So as the #1 job site in the world, we have 250 million job seekers in 60 countries around the world coming to Indeed every month. And so we get a pretty unique view on the overall labor market. And we have a team of economists called the Hiring Lab, who look at this data every week. And so what we've seen, at the outset of the pandemic, there was clearly a steep decline in job postings, which is the best way that we can measure economic activity. But there was a quick rebound as restrictions were lifted. And so it's, as we've been talking about, this K-shaped or whatever shape you like, it's been different in different sectors. And what we have seen is that there's been a really sharp growth in lower wage jobs, while there's still a year-over-year decline in some of the white-collar jobs. And that's really a difference between what happened back in the spring. The service economy was hit really hard immediately, and with the recovery, there's been growth in hiring in those jobs. The higher wage office sector jobs didn't see the same kind of job loss, and so they're not seeing the same kind of hiring surge right now. It is also very different around the world. A lot of that is different based on how different governments responded. In Japan, for example, one extreme where employers really can't fire workers, like the office sector here, there was very little job loss. So it's a slower recovery, where in the US, those protections don't exist. Millions of workers lost their jobs immediately, but as different sectors pick back up, there has been more hiring. Okay. So I think there's no one or the other answer. It's a little more nuanced than that.
Okay, it may be nuanced, but the reality, and I take your point on that well, but the reality is what we're really seeking is two things now. Understanding, firstly, how many more jobs globally are likely to be lost because of a second and a third wave before the vaccine. But I think it's important what the British finance minister called the unviable jobs, or the non-viable jobs. France had a massive program to keep people in work, but many of those jobs are not viable.
Right. Yeah. So we look at it distinctly. Our economists sort of break it down. There's 4 different categories of jobs. There's what you're describing is what we're describing as the damaged category. So hospitality, tourism, sports, arts and entertainment, anywhere where the occupations require people gathering together in large groups. We don't know how long it's going to take and what any long-term recovery will look like. But there are the clear winners. So the massive companies that are hiring in construction, warehousing, and specifically driving and logistics jobs that are fueling all the e-commerce. There's the sectors that are rebounding, like restaurants and stores that are slowly opening. Those will be volatile because as there are surges, they'll close back down and open back up. But then there's the ones that are on hold, the white collar office sector, banking, finance, software development jobs. Those have been affected very little. And so we expect between all of that, that there still is a huge amount of upside in recovery to come.
Chris, that upside, I mean, the market's over 30,000. We know there's a perversion going on because of low interest rates, et cetera, et cetera. I worry about an entire generation that simply won't have a job and won't be skilled, because not only have they got to deal with pandemic, AI is going to prevent those jobs from coming back.
Yeah, and that's an age-old discussion that goes back to every single technological advance that has ever happened. The Luddites were the first group that went and destroyed the weaving looms because they thought that hand weavers were going to not have jobs anymore. Clearly, there's a lot more people employed in textile today than there was back then. That has happened with every single technological shift over the years. There's a lot of debate right now about what the future of AI means, but if you, I don't know, I'm a humanist, and I believe that every single one of those technology shifts has created more jobs long term. Now, the real impact, though, is that there is short term disturbance, and that will put people out of work. So if you look at something like automated driving, there's no question that a quick shift, when that happens, there will be millions of drivers who are put out of work. Long term, it will end up creating more opportunity for more people.
Chris, we do need to talk about this more often, and we will. And I'm grateful that you're joining us. Thank you very much for tonight.
Thanks so much for having me, Richard.